Is to show you how to use manual payroll in QuickBooks Desktop. In other words, how to turn on QuickBooks Desktop payroll without the payroll subscription. And I'll talk about the circumstances in which this would be useful in. Now, we're also going to talk about the workaround for doing job costing in QuickBooks Desktop when you have an outside payroll company like ADP or Paychex, because that would really be the reason why you turn on manual payroll. Now, why use manual payroll? There are two scenarios in which I think that manual payroll in QuickBooks Desktop would be, let me put here desktop, not online. QuickBooks Desktop would be useful. One of them is you run all the payroll information in an outside system. You have it handwritten or in Excel or something like that, but you still want to use your paychecks inside QuickBooks and you want to print professional looking pay stubs that QuickBooks can do with the payroll module. So because you're not paying the Intuit or the QuickBooks payroll service, you don't get access to all the calculations, but you're going to plug in all the numbers and still be able to print out paychecks or pay stubs. The other reason why you would use manual payroll would be that you run all your payroll in an outside payroll company like ADP or Paychecks, and you want to do real precise job costing inside QuickBooks Desktop without having to deal with really long, tedious journal entries, which is the way that people right now, the only way that people can do job costing with an outside payroll system that's not through QuickBooks. To do big, long journal entries to be able to bring those payroll expenses into job costing. So some of the pros and cons of manual payroll. Some of the pros is that you can use the full timesheet capabilities and you can process paychecks as if you're actually running payroll through QuickBooks. And also you can use all the job costing capabilities. Now the cons is none of the paychecks are going to have automated payroll tax calculations. You're not going to be able to make any tax payments. You're not going to be able to send any forms or create any forms. So again, you turn on manual payroll because you don't want to pay for the QuickBooks payroll subscription because you're using another payroll service of some sort, but you do want the paycheck creation capabilities inside QuickBooks for the reasons that we mentioned here. Okay, let me go ahead and do a demo of how that works. So first of all, this is a blank QuickBooks file. I'm going to show you there's nothing in the profit and loss. Just want to show you it's a completely blank QuickBooks file. And the way we turn on manual payroll, and first of all, the way we know we don't have payroll is because when we click on the employees menu, we don't have a payroll option. And then when I click on Payroll Center, normally there is a tab. There's a tab right here, Employees Transactions, and then next to the Transactions tab, there's a tab called Payroll Center. When that tab is not there, that means payroll is not turned on. And like I mentioned earlier, under normal circumstances, you would have to pay for the annual payroll subscription in order to get that in there. So to turn on manual payroll, we're going to click on the Help menu, and then we're going to go down to QuickBooks Help. Okay. And we're going to search. We're literally going to type in the search box. We're just going to type the words manual payroll. So it is a really hidden thing. It's not something that Intuit has made really public and something that Intuit doesn't recommend or suggest that you actually run manual payroll because obviously payroll is very delicate. If you have mistakes on your payroll subscription and stuff like that, you can get tons of penalties from the IRS and your local governments. So once you search manual payroll, one of the options here says process manual payroll without a subscription to QuickBooks Payroll. So I'm going to go ahead and click on that. And then it kind of explains to you exactly what it means, why you would do that and all that stuff. And then there's a button here that says set up your company file for manual payroll calculation settings. Okay, so you're going to click there where it says manual payroll calculation settings. We'll click on that. And then it says, hey, just to make sure, double check. It tells you, before you begin, understand what's happening. You can't file forms. You can't do your taxes. None of that stuff. This is just for internal paycheck and job costing purposes only. So then it says if you're sure and you want to move forward, we're going to click here where it says set my company file to manual payroll calculation. So I'm going to go ahead and click on that. And then I get a warning. Okay, that warning, it tells you you must now calculate and enter your paychecks manually. If you need to, if you have an active subscription, make sure you call into it and cancel it because this doesn't cancel your payroll subscription if you happen to have one. So I'm going to go ahead and click OK. I'll click it one more time just in case, and then close that. And once manual payroll is set up, you will notice that when you go into employees, employee center, you're not going to see the payroll center tab in there. However, when I click on employees, we're going to now see the options of pay employees. It says pay payroll taxes again. You really can't do it, but you're going to see that pay employees button, which is extremely important. And when you go to the home page, you're going to see that down here under employees, we now have the pay employees button, and this wouldn't show in a company that doesn't have payroll turned on. It also has a button saying turn on payroll, and again, so we fooled QuickBooks into just thinking that it can't produce paychecks, but again, it's not using all of the payroll functions, but it will use the paychecks and job costing, which is what we're going to take advantage of and use these examples for. Now, once you set up payroll, one of the things I recommend you to do is go in the employees, in the employee section, and go to payroll setup and go through a standard payroll setup. Even though, again, we're not using all the payroll features, I recommend you actually go through all the payroll setup, set up your compensation, payroll items, set up your benefits. Those are really important to set up as well. I'm going to put here health insurance. Let's say, for example, that the employees get health insurance too, so we can include that into their job costing. And then we'll put here that the company pays for it and hit next. And then we could just kind of just speed through everything else here. Let's say that there isn't any other additional benefits, so we'll speed through all these things. We'll just keep hitting continue. Again, any employer paid expenses or benefits, they need to be added there so they become a part of the job costing calculation. So we're going to go ahead and hit continue. Then it's asking you about federal taxes. Again, we don't even have to worry too much about those. So we'll just just keep clicking continue. We won't enter any year-to-date paychecks. We'll hit continue and then go to the payroll center. And that basically that initial setup will get you pretty much started. Okay, so again, let's assume that I'm gonna go into my write check here function real quick. Let's assume that where's my banking write check? So let's assume that we did pay an outside payroll company. Let's say we paid ADP for payroll services, and we pay them a total of, just to put a number there, $4,800. And then we're gonna put this under payroll expenses, okay? And then we'll put here net checks or something like that. And let's say that at the same time we had 1850 also come out from ADP, and we're also going to go ahead and put that under payroll expenses. And if you want to, we can put here payroll taxes. Okay, that's the typical thing that happens when you use an outside payroll company. Just a whole bunch of money comes out to pay the employees, and a bunch of money comes out to pay the payroll taxes. Again, we're going to use one expense category for everything. That way, all the debits and credits, they all end up hitting the same exact category. So we're going to go ahead and hit save and close. Okay, that way, let me just pull up a profit and loss real quick. We see the total payroll expenses were the two amounts that were paid to the outside payroll company. Now, the challenge is that we actually have internal employees, and these internal employees have hours that they spend on several jobs, and we want to be able to do some job costing. So we already ran payroll through the other company. However, we're going to use timesheets. So we're going to go to employee, timesheet, use weekly timesheet, and then we'll go ahead and do a timesheet, let's say for the first week of the second week of the year. So we'll do a timesheet that closes on the 8th, and we'll pick our first employee. Our first employee is Hector Garcia. And Let me just maximize that, and then I'll go ahead and pick the job that he was working on. Actually, let me create a couple of jobs here. So I'm going to do here job 1, and then I'll create another job here called job 2. Okay, and then we'll kind of use this as an example. So Hector worked on job 1, and I'm going to go ahead and select hourly, and he worked 8 hours this day, 7 hours that day, 4 hours that day. And then on job 2, doing the same type of service here, we're going to go ahead and put that he worked 1 hour here, 4 hours here, 6 hours here, 8 hours, 7 hours here, and then we'll create a job called idle. Then it's basically a job that doesn't get any job costing associated with it, so it sort of goes into like a generic, job that's not really a job costed job, and let's say 3 hours of idle office. Okay, I'll go ahead and unmark all these billable. That way we don't confuse our invoicing system. So that was the actual, that's the actual hours that this employee worked that week. Let me do the same. Let me go ahead and hit yes there, and let me do the next employee and the same thing. So he worked on job 1, he worked on job 2, and then let's also say that he also worked on a third job. Okay. Okay, there you go. So let's say this is the same type of service. Say they all do the same thing. Whoops, let me just put that there. And it's a timesheet process, right? It's a lot of work. Okay, so he worked 7 hours on this job, and then he worked 8 hours on this job, and then he worked 4 hours on this job, and 4 hours on this job, and then 8 hours here, 8 hours, and let's say 3 hours here, and then let's do some more idle time there. It's useful to have that one job for idle time. That way you're also tracking, which how much of your cost is not going to actual work production. Okay, we'll go ahead and hit save and close. Okay, so if we pull a regular report of time by job, we do this job time and mileage, and we do a time by job summary. We're going to see all of the times that we have assigned for each job. So in this case, we have 9 hours to idle, 26 to job 1, 30 to job 2, 15 to job 3. Okay, so let me go ahead and create a paycheck. And again, we can do it two ways. We can click down here where it says pay employees, or we can go up here where it says employee menu, pay employees. Either one works. So we'll go ahead and click on pay employees. We'll select when the date period ended. So let's say it ended on the 8th, and it's a weekly paycheck that we create on the, let's say, on the 15th. And then we'll go ahead and select both of these employees here, hit continue. And then when I click on open paycheck detail, you're going to see all the hours are being assigned to each job, right? Because the job costing is enabled, and all of the service items here. This has to do with invoicing. However, we never really set up an underlying rate for this employee. This is why it's showing a zero paycheck. So let me go ahead and finish this later for a second. Go into my employee section and double click on this employee, and then we'll go ahead and go to payroll info, and we'll set up his rate. So let's say he's $25 an hour, and let's say he will have some health benefits, and let's say that every week $100, the company pays $100 towards the health insurance. And then we're gonna go down here. No, actually, that's fine. We'll do it like this. So $25, we'll hit OK. And then we'll go to Steven Smith here. Same thing. We'll go to payroll. Let's say he gets paid $45 an hour, and every week we pay $150 towards his health insurance. Okay, perfect. So, and then we'll set this up as weekly, and then I'll set up Hector Garcia as weekly as well. Where are we here? Weekly. Okay, perfect. Okay, so let me go back and create that paycheck again. So I'll go to pay employees, and here we go. Period ends on the 8th, which is that week that we did the paychecks for. I'm going to go ahead and hit continue. And now we're going to see actual paychecks. Okay, now we see actual paychecks. Now, because it's manual payroll, you're not really going to see any taxes be included here, and that's kind of the tricky piece, because you don't have manual payroll in there. You would have to manually put all their taxes in there. However, we really don't care about, in the case that we don't mind too much for job costing purposes, what the pay stubs should look like. Then we really don't care about any of those. But if we do care, what the pay stubs look like, we actually gonna have to take the paycheck from ADP or whatever, and get the data and actually plug all that stuff in there. However, we really don't care for job costing purposes. However, we do care about the company cost here on the right side, where it says the company cost. The company cost is really, really important. So before we actually create the paycheck, we're going to have to figure out a way to get QuickBooks to calculate all the company paid taxes and the company things like the company paid workers' comp. So what I do under manual payroll is we'll go into the list menu and we'll go to payroll item settings, and then I'm going to create a new payroll item. I'll click here on custom, which I'm going to call it taxes and workers' comp. So I'm going to click here where it says other tax and hit next. And I'm going to do user defined tax. So I'm just going to basically choose a fixed percentage amount that is going to take off the gross amount and calculate sort of and again, this is still just an estimate, but it should be a lot better than making this, long journal entries. So we're going to calculate a percentage that is both going to be payroll taxes and workers' comp that's going to be attached to that job costing. So we'll go ahead and click on taxes paid by company. I'll hit next, and then uh, I'll call it company paid taxes plus workers' comp or whatever. Okay. And then we'll go ahead and hit next. And then again, we have to make sure that we hit that payroll expense account for everything, that same account that we want to use for everything. And then I'll hit next, 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 and finish. Okay. Then I'm going to go into each employee, and I'm going to go into edit employee, and I'm going to go into payroll. I'm going to click on taxes, then click on other, and then I'm going to select that workers comp paid workers comp, and then I'm going to put a rate. Let's say that the average rate between the taxes I'm paying for that employee plus the workers comp expense, let's say, is 18%. That's basically going to add 18% of the gross pay for that employee into the job costing, which will be very useful to get a much better with fully benefits costed payroll job costing exercise. So I'll hit OK, and then I'll go ahead and click OK there. And again, we're using that as a lump sum percentage to represent the total cost of workers' comp, and I'll do it for each employee, workers' comp and payroll taxes for each individual. So I'll go ahead and hit OK. And again, if you got more employees that have more expensive workers' comp than others, you may have a different percentage. Again, that's not an exact science, but I'm doing that for the purpose of being able to job cost both the gross pay and that 18%, which represents apparently both taxes and workers' comp. So I'm going to go back to pay employees and go ahead and select the two employees I want to pay. I'll select the period ending is on the 8th, which is when we created those timesheets. We'll hit continue. There are my two employees and their two paychecks. I'm going to go to open paycheck detail. And for this particular employee, we have all their hours are being job costed to each job. I go to save next. I'll see the next employee. Again, we have all that stuff in there. And then we see the company paid expense of that insurance for 150. And then we see the workers' comp and taxes of 324. So basically, QuickBooks will calculate that and spread that amongst the jobs. So I'm going to go ahead and hit save and close. Now, this is the trick. Now, we don't want to use a sort of a real bank account, right? Because we're not really paying out any money for this. So I'm going to go to add new, and I'm going to create a new bank account called paycheck job allocation. And then I'll go ahead and hit continue. So I'm going to use sort of a clearing account just for these purposes. So I'm going to create a bank account just so I can create this internal paychecks that we're using just for the purposes of job costing. So I'm going to go ahead and click on create paycheck. and I'll hit close. And then one last thing to make sure that I don't have this crazy thing on the balance sheet with a negative amount to my paycheck job allocation. I'm going to go into banking, use register. I'm going to go into my paycheck job allocation, and I'm going to make sure that I take the same balance and send it back to payroll expenses, right? Again, we're using that one account for everything. That way, it's basically debits and credits. It zeroes out, and at the end, it's not affecting anything of my books. So let me go ahead and go to reports, company financial, payroll, expenses standard, and then we're going to see here under payroll expenses. When I double click on that, I'm going to see my ADP paychecks, right? The actual net paychecks that I sent, and all the payroll taxes, and then I'm going to see all my employees, and then I'm going to see at the end it basically balances itself out. Now, at the end of the day, what you want to see in that total payroll expense account needs to match everything that you paid out that third-party payroll company like ADP. So doesn't matter how many paychecks I have in there and how much job costing I have. The total amount that should be at the end is 6650. If I scroll the way down, the total is 6650 because every single entry that we made was meant to debit and credit itself out. And this again, this is only used for job costing purposes. Now, one of the areas where people would like to see a practical reason for doing this is, well, because when I go do a profit and loss by job, like this, and I'm gonna go ahead and make this font a little bit bigger so everything is pretty clear in there. Is you're gonna see, okay, so for idle, we job costed $407 into the idle job. For job one, we job costed 932, job two 1168, job three 796, and that includes, if I double click on any of these, you will notice that I'm gonna expand it. It includes the gross pay, which in this case is $675, and that 121.50, it's likely to be, let me just go ahead and look at the paycheck. It's going to be a proportion of this company paid workers' comp and taxes and health insurance benefits. So you're able to see basically not just the gross pay, but also all the attaching benefits that comes to the cost of paying an employee, all job costed. So that's running manual payroll for the purposes of job costing when you have a third-party payroll system. Now, I want to talk about something very specific. At the beginning, I spoke about the possibility of using manual payroll to run professional-looking pay stubs. That's if you use manual payroll only for giving your employees professional looking pay stubs because you calculate payroll manually. If that is the case, then we're not going to use this special account that we talked about here. We're not going to use that. What we are going to use is we're actually going to put the federal withholding in there. And then we're going to basically, this is information that we probably have already calculated in another system of some sort. Okay, so we're actually going to take the information from the other payroll system that we have, and we're going to enter all the actual real federal withholding, the real Social Security, and the real Medicare, and then this would represent what the actual real paycheck looks like. And we don't have to use clearing accounts or anything like that. This is if you're actually running paychecks in QuickBooks, but we're just doing the calculations outside. Because if you do it this way, even if you're not paying for the payroll subscription, you can still get a professional looking pay stub. And I'm going to go ahead and show you what that looks like. So you get a professional looking pay stub that includes all the taxes. Let me go ahead and save this first. Go ahead and hit save, and then I'll pull it up again so we can see what the pay stub looks like. So I'm going to go to print pay stub, and I'll hit preview, and you're going to see the pay stub with their gross pay and all of their taxes that you calculated in a manually through Excel or whatever, and so you can still produce professional looking paychecks without having to have the payroll subscription in QuickBooks. Last thing I want to make sure that I mention is I'm not encouraging people not to use the QuickBooks Payroll service. It's actually the opposite. I want you to use the QuickBooks Payroll service. The QuickBooks Payroll service is great, but for whatever reason, sometimes our hands are tied and we have to use an outside payroll system, but we still want to do manual job costing. So this is why I wanted to show you how to do this. Thanks for watching.
Who is Carl Icahn, and why did Time magazine call him